Well, you know, I also was a member of the team that Jimmy Carter sent in 1979 to settle our differences with Deng Xiaoping and open up the ability to trade with China. So I've been around for a long time, and I would only say this about what the president's saying right now. We're the only people not in that room. I mean, he's introduced everybody in America.
Yes.
Absolutely remarkable. Here's what I think. First of all, my experience with China, going back to '79, doing the WTO protocols, working with Charlene Barshevsky, they always give you something when you push them. We're going to have a nice ag package here. It's rumored about $32 billion. A good package on oil and gas, natural gas, exports of LNG, and also some statement apparently about opening up their financial system to our institutions. Makes sense because their financial institutions don't work well. But let's not get overexcited about this. A, we haven't seen the exact document, and B, it is very unlikely that we've made the kind of progress we need to succeed as a competitor against their subsidizing intellectual property theft, 5G, and AI, and all these complex matters of protecting our companies when they operate in China. So, you know, I think we have to be very careful here not to be too optimistic. It is a step forward. I think the president actually has been firm with China. In our administration, the Clinton administration I served in for 4 years as deputy USTR, we let them get away with a little bit too much. Each successive administration has let them get away with it a little bit too much. But now we're calling their card. It's the beginning of a process. It's not the final answer. And I would be very cautious here. As to the markets,
let me stop you for a second.
Any better than this right now? It's sort of it's something we created. We got so excited about. We're getting a partial solution. That's a step forward, but that's already discounted in my view. And one last comment on the Fed. I think Rob Kaplan is absolutely correct. This is my successor at the Dallas Fed. Very good guy, very thoughtful man, markets-oriented, former vice chair of Goldman Sachs. You can just go on your Bloomberg and just track the expansion of the balance sheet now from its low in September, recent low, up to above 4.1 trillion. The S&P just follows straight along. So that is an issue they're worried about. And I think that's something the market should be worried about. Indeed, if they stop and start tapering off their expansion of the balance sheet. And that will lead to a little political pressure. But I know that Kaplan is not the only member of the FOMC that's very worried about what they've created and how they bring it to an end.
You've covered a lot there, Richard, and I want to stick to the deal first and then get to the other topic. No, I appreciate it. But I do want to stick to the deal for the time being. Right. Are you saying that the last 2 years, in your estimation, were worth it?
I think it has been worth it to stand China up, that we're not going to let them get away with the way they've been operating now that they're a large, important, slightly more market-driven economy. It's making clear, and I think President Trump has done a good job on this with his assistance of Kudlow, et cetera, that we are fierce competitors, and we believe in a certain way of operating that is an anathema to the way they operate in China and vice versa. And as far as capitalism is concerned, we realize the threat that they present. We realize how they violate the norms of international commercial commerce, and we're not going to put up with it anymore. That's a big step forward. It's an acknowledgement of reality. Now, how do you square that circle of a dictatorial, communist, control-freak government with our spastic entrepreneurial system that we have here in the United States, which has proven to be the greatest lubricant of our success? And how do we deal with each other in global markets competing for market share? That is the big question. I don't see how you square this corner very easily. They have a different way of operating. They're control freaks. They want to have control of their production function, but also of their people. We operate in a different mode. Europe operates in a different mode. India operates in a different mode. Australia operates in a different mode. So this is going to be a constant battle and conflict. And I don't think we've come up with the right answer thus far. I'm not sure there is an answer, but I will say this. It's a step forward.
You think the Chinese will follow through on the promises that they're allegedly making today? And we'll get more details once we actually see the fine print. But you're talking about an awful lot in terms of dollar commitments for manufacturing products and ag products.
I think, and I believe in this agreement, it's a 2-year purchase program for ag, LNG, financial service liberalization, et cetera. Probably, no doubt, some aircraft and such. we'll have to see if they actually follow through. Usually they do follow through with their commitments in terms of purchases, but they rarely follow through with what they commit to legally in terms of operating within the WTO or an international fora. So we'll have to see. I have a high respect for the Chinese people. I have a high respect for the liberalization taking place since Deng Xiaoping. I have a great fear of what's happened since Xi Jinping has become the leader of China and the way he has undone a lot of Deng Xiaoping's liberalization. And I believe that he's going to be a thorn or a burr under our saddle for the longest possible time.
There are many predictions around town today, Richard, on what this trade deal is going to mean for the global trading environment, for what it means to global growth, for what it means to GDP here in the United States. Larry Kudlow made a big prediction earlier today saying on this network that he thinks it will add, at least in his words, 0.5% of growth this year and next. Do you think that can be achieved? Is that realistic?
Well, it'll be hard to tell whether this adds to our growth or, as was pointed out earlier on the show, a better sense of confidence leads to a little bit more capex. We'll have to see. I've known Larry Kudlow since we were in our 20s, and cuddly is what we call him, by the way. He doesn't seem as cuddly today as he was back then, but I have a high respect for Larry, and I think he's done a very good job here in informing and sometimes restraining the president, but he's paid to be optimistic here, so we'll just have to see whether or not that big a hit to GDP will occur. Now, the Fed studies that have been done as to the cost of the trade restrictions that Trump imposed would verify the kind of number that Larry's talking about. The question is over what time? Because the Fed studies have shown, and this has been announced publicly, that it set GDP growth back by about 0.5 percentage point. And if that's the case, then relieving this tension should add to GDP growth and offset that setback that took place. We'll see.
Richard, if you're sitting in the room with Jay Powell today and you have this news and you see where the stock market is, as I mentioned earlier, the Dow's going for its first ever close above 29,000 after getting above that historic level last week. What are they thinking today?
Well, I think they are seriously thinking about the effect of the expanding of the balance sheet and its direct correlation with the S&P 500. And look at the NASDAQ, what's happened since October. I mean, these are ferocious run-ups. And will that create some problems? Can they be a force of instability? How do you rein that in without creating a total market cave-in, which could impact the real economy? I believe this is very much on their mind right now.
The term irrational exuberance, obviously it was made famous by Alan Greenspan.
Yeah.
Are you feeling any of that today as you look at the market and you think Jay Powell may be?
When Alan retired, I had a prize breeding bull on my ranch here in Texas, and I gave him petting rights to the bull. The bull's name we changed to irrational exuberance. He sent me a letter right after that with a picture of him and the bull, and it said, you know, Richard, irrational exuberance is truly a lot of bull. So maybe it's a lot of bull, maybe it's not. I do think we are richly priced right here. It's not. I'm not a market expert or timer, but if you look at all the indicia, unless we get the kind of earnings growth which we hope we get, then one could argue that it's certainly fully priced, if not richly priced.
Well, we all remember, of course, the market after those words from Alan Greenspan went up for another 4 years. So it got even more irrationally exuberant after that. Richard, stay with me. I've got the gang in front of me, as you know. I'd like to get some of their thoughts about what you said today, less on the trade side, but now more on the market side, that the market's rich, too rich. Joe, what do you think?
Well, it's exuberant. It may not be irrational exuberance, but it's exuberant. Let's admit that.
I think people would agree with you on that.
Well, Richard, and you're correct to cite the Federal Reserve's expansion of the balance sheet. If you look at the prior 18 years, the S&P was the leading asset class 3 consecutive years, 13, 14, 15. And we all know from December of 12 to January of 15, we took the size of the balance sheet from $2.7 to $4.5 trillion. So the concern as an investor looking towards 2020 is when exactly is that moment and what is going to be the impact, not just on equities, but also on the credit markets when we temper the growth of the balance sheet and put a pause to it?
I would posit, and this is just me personally speaking, this isn't necessarily a Barclays point of view or anybody else, that the market is determining interest rates. The Fed has lost control of the yield curve. They really don't have much impact. Some would say further than 3 years out. Some would say more than a year out. If you look at where the amount of 10 years that are held, for example, versus what's out there trading in the marketplace, I would argue that that 10-year rate, the key rate in the world, is determined by the markets. So I don't know what kind of impact it would have on the credit markets. And I do know that there is a direct correlation, 100% correlation. If you just look at what's happened with the S&P and the NASDAQ since the bottom in October, with the expansion of the balance sheet, taking it up to a little over 4.1 trillion from its nadir of about 3.8 plus. So I just note that correlation. It's got to be driving the markets. Certainly the markets, the people that I speak to that operate in the market are hopeful that the Fed doesn't start reducing or at least tapering off the growth in the balance sheet, start reducing it or holding it steady. That money is flowing into equities. It flows into equities when yields are less attractive, which they are now. They're still very low. So it's sort of a self-fulfilling prophecy here, and I just worry about what would happen if the Fed tapers this off a little bit. And I think that's what Robert Kaplan is concerned about and also wary of, because it could lead to further problems down the road if you keep expanding the balance sheet as they have done since they announced this whole repo facility program.
Richard, do you, as a central banker, worry about a new paradigm where tariffs become the norm in the future and trade wars become the norm, and how you as central bankers need to model that into your economic forecasting?
Well, I was raised on the, remember, I'll be 71 in March. I was raised on the Bretton Woods institutions, and I happen to be a free trader. I worked for Bill Clinton on that. He was a free trader. George H.W. Bush, who set a lot of this stuff in place, was a free trader. So I'm not a big fan of tariffs. But on the other hand, if somebody violates the system so obtusely as China has done, something had to be done to get their attention and to make them think and make them realize they are being detected in terms of their misbehavior in the marketplace of traded goods. So I understand this having happened. I'm not fully against it. I just don't want it to become the norm.
Hasn't it already, though? It's not just with China.
I agree. We're talking about it with Europe. We have the European Trade Commissioner over here as we speak. He's been here the last couple of days. We see it happening globally everywhere. But we are the principal proponent, the United States, the biggest economy, the most important economy, the greatest economy in the world, of pushing this as a tool. And I think we have to be very careful it doesn't get out of control.
I just want to alert everybody, Richard, forgive me, China's Vice Premier Liu He is now speaking, the president standing behind him. Just for all of you who are waiting for the official signing, we are as well, and we'll take you back to the East Room when we do get closer to that. Lastly, Richard, before I let you run, it certainly wasn't lost on me for a moment. Joe brought it up, but I thought at the moment I saw Kevin Warsh in the room today in the great lead up to this event, and I was wondering what all of that meant, and to me it could only mean one thing. Do you think he is going to be the next Fed chair?
You know, he thought he was going to be governor of the Bank of England. Remember, just 2 weeks ago or 3 weeks ago, whenever that was. So I think Kevin is a talented young man. He is young. His first meetings with the president on the last go-around, the president was surprised and actually commented how terribly young he was. This much I believe. And that is that when Jay Powell comes up for reappointment in 2022, he will not be reappointed. I think that's pretty clear. And I think by then Kevin will have matured a great deal more. I think it's a possibility. But he's not going to get that until the current Fed chairman, Jerome Powell, Jay Powell, finishes his term. And I don't see any other outcome. And I hope by then that Kevin has matured a lot since we served together when he was on the Board of Governors. I think he's immensely talented, and we'll just have to see.
It's remarkable in and of itself, is it not, Richard, that we could be literally dealing with a time of amazingly, historically low interest rates and historically high stock markets and a well-performing economy, and we're going to change the chairman of the Federal Reserve?
Well, we know that the current president doesn't feel good about the current chair of the Federal Reserve. And I also, knowing Jay Powell as well as I do, and I know him well, He has a job to do. He wants to get it done. He's not the kind of ambitious guy that wants to hang around forever. He has a perfect resume, in my view. He's done a lot of good for this country. And I think he'll just serve his term out and get it done. And then we'll see what happens next. But Kevin is ambitious, but let's remember he's also talented. And we'll have to see whether or not that manifests itself in becoming chairman of the Fed.
How do you think the market...
Just one last thing. Just remember, he and Schwarzman et al., are Ajay Banga, they were all on that first team that the president put together to advise him on the economy. So that group's in the room. And I think that's why that group is in the room. I wouldn't read too much into who's in the room, other than the fact that these were the people that originally were on that committee, and it got disbanded later on.